From the trading floor of the NYMEX, I'm Jill Malandrionop for TheStreet. And Zook, the story in gold this week is what Janet Yellen and the Fed have to say.
Well, certainly this morning's initial reaction right before she started was to take gold below 1,200, make a new low for this particular move down to the low 1190s. We're getting into the support area between 1180 and 1,200. But as soon as she started the testimony, there seems to be more dovishness and a willingness to hold rates where they are, and we brought it right back up to around 12. So lack of volatility, lack of any interest now that she's intimated that there's not going to be any interest rate. So gold is going to be on its own for a little while now.
Even if they do take up interest rates 0.25%, what difference is that really going to make?
Well, the realistic situation is the dollar has been so dominant that once the dollar pulls back a little bit, we may finally find a little support for gold. But the dollar dominance and the currency destruction has been much more the story for gold lately.
But even if it's only 0.25%, our economy has been relatively strong, and you're seeing a lot of money into the U.S. markets for that reason, at least in the near term. 0.25%, is that really going to, from an overall perspective, the S&P, is that really going to make much of a difference?
Well, they already took the punch bowl away back in October from the bond purchases, and we've only done nothing but continue to make new highs. The interest rate increases would only be another indication that we are on a stronger footing as far as they're concerned, and they have been very cautious. So when they finally do move, I think that it would be a strong indication that they're very confident with the economy at that point and not really going to put the equities in any jeopardy of any major backslide.
Okay, thanks very much, Duke. From the trading floor of the NYMEX, I'm Jill Malandrionop for TheStreet.